Hi there and welcome to Dukascopy. I'm Sinead McLaughlin and I'm joined once again by technical analyst Bruno Estier. Welcome back, Bruno.
Good morning, Sinead.
So I understand you've sort of had a bullish view on the equities market since the beginning of the year. So is this uptrend continuing?
Yes, let's look at long-term charts at the beginning of this quarter. The first thing which is very important is the move of the Euro stocks. Here we have a monthly chart since 2000. And we noticed two things happened since the beginning of the year. The first thing is on the relative strength, the ratio of the Euro stocks divided by the S&P 500. This line has stopped moving down and since January is moving up. The second thing is the trend line joining the high from the 2007. It has been broken at 3,500 around January. And now it's moving up toward 3830. And we also noticed that this rise is done with a lot of momentum. It's therefore getting toward the direction of 3910. This is a 70% retracement of the whole decline from 45 to 1700. And therefore, when the market moves above 66%, around 70, then it will move towards 100%. So it's expected to see the high of 207 again.
And do you remain bullish on the Japanese equity market?
The Japanese equity market is the other market where we are overweighted. Here we could see that, in a sense, Japanese market is a bit more bullish than the Euro stocks because we are above the 207 high at 18,300. Now we are moving towards 20,000, the big landmark, but in fact the resistance is a little bit higher at 21,000. So here we have rising relative strength as well for now more than 6 months and rising momentum, so this is still a bullish market.
And I understand you also want to focus on the leading role of the China equity market.
Yes, I think China has been making recently some headlines because, especially in the last 2 weeks, it has almost increased by 15%. We have here a chart from 207, a long-term monthly chart, and we see that we have broken former big triangle here, and we are moving toward the high of 207. This is a very fast move. We see on the relative strength that this ratio of China ETF versus S&P 500 is rising, but also it has been rising very strongly against other emerging markets. So here probably this rise is going to stall a little bit.
So is China rising alone then?
Well, it was rising alone. If we look at Brazil, Latin America was really on the back foot, and you see that also with this relative strength line declining already for all of 2013-14 as well. Now, on a nominal basis, the ETF from Brazil was also going all the way down up to the end of March, and in March we made a spike. Now we are at a situation where the momentum is oversold and it's starting to bottom. So with a reversal in price somehow, it's probably going to go in the same direction as the Chinese market and rebound as well.
So why is it lagging so much then?
It was lagging in relationship to oil. And here the good news is that oil is bottoming. As we have been discussing 3 weeks ago, we had a second bottom around 43, and now we are going toward the top of the range, 43 to 54. And the good news is that this is creating a kind of a double bottom pattern. And if we break above 54, then we had the target towards 65. So oil is not going to be something which is hindering anymore Latin America and oil producing countries.
So does this mean it's helping the Russian market then?
That's right. The next thing is Russia, and investors are anticipating this rebound in Russia. Indeed, it is accelerating, passing the 1,000 mark recently with rising momentum, and also on relative strength, it's starting to bottom and rise a little bit against the S&P 500 and also against other emerging markets. So China is not rising alone. Indeed, when we look at this Fibonacci retracement, we have a target around 1,350, which is a 50% retracement of the whole decline, which is a normal retracement. but compared to 1,000, it's a relatively large percentage increase. It's 35% increase.
So you were a fan of the Indian market, so are they bullish?
Well, with all these other markets, Russia, India, and Brazil starting to bottom, in fact, India, which was a favorite market, is now starting to stall a little bit. And we see that not really on the nominal side of the ETF, but on the relative strength. We see that on versus the S&P 500, it's flattening since the beginning of the year, and also against emerging markets. So here it's probably time to take a little bit profit in India and go to other emerging markets.
And finally, are these bullish markets helping the S&P 500?
Well, we would like so, but here we need a little bit of patience. Indeed, this S&P 500 is still in a bullish mode in the sense that it is still in a rising wedge, and every time we come to the support of the wedge, it's rebounding. Right now, all these markets are going up, and it's also lifting a little bit the S&P, which is coming closer to the top of its resistance near 2120. So we can expect a break above 2120, a break up toward the top of the range of the wedge, and also with a target around 2200. But here the really the important thing is to realize that in 2015 the relative strength of the S&P 500 is coming down. It's not anymore the S&P 500 which outperform all the others. This is the other markets which are outperforming the S&P 500, and this is a big change from 2014.
Definitely a very big change from 2014. Thank you so much for your insight today, Bruno. That's all from Bruno and myself for now. Thanks for tuning in, and be sure to keep clicking back to Dukascopy TV.